Let's get started by introducing the two guests who will be with us over the next half an hour. We'll have Avinash Gorakhshekar, who's the head of research at mintdirect.com. He joins in to talk about the fundamentals, and on the technicals then we've got our very own Mitesh Thakkar, technical analyst at miteshthakkar.com. Gentlemen, thanks very much for being with us. Let's focus straight off on to the first query for the day. We've got Nitin Ahuja, who's got a question on an Aurobindo Pharma.
Aurobindo Pharma, bought it at 360, 40 quantities. I want to know the view on this, fundamental wise as well as technical wise. I can hold this stock, or what is the view on this?
Okay, that's the call coming in on Aurobindo Pharma, and he wants to know what to do. He's got it at a level of 360, which means he's in the money. But given that this stock has seen such a massive rally, Avinash, close to 100% in the last 3 months itself, do you think that most of the positives are already factored in? From the fundamental perspective, lots of mid-cap pharma stocks have been in action. What is your advice to him on Aurobindo specifically at these levels?
Avan, I would suggest that since he has entered at a level of 360, and I think looking at the kind of medium to long term prospects for Aurobindo Pharma, I think there is still some decent upside left on the stock here. More importantly, last year we saw that the generic formulation business, which is a very important business for Aurobindo, actually grew almost by 27%. And our sense is that for the next 2 years, this kind of aggressive traction will continue here. More importantly, from a profit point of view and a top line point of view, the next 2 years could be very strong for Aurobindo, and obviously valuations will definitely get re-rated. So I would suggest that he should hold on. I think he could get a price of 430 if he holds on for another, say, 6 to 12 months. Although the stock has gone up pretty sharply, I think he is in the money. He's got a good entry price, so I think he should hold on.
Hold on, that's the call coming in on an Aurobindo Pharma, and this stock of course has been a multi-bagger in the last 1 year. From those lows of 130 odd, I think it's moved past the 400 mark, but there's more upside on the fundamental grounds as well. But on the technicals then, Mitesh, what are you seeing on the charts, especially given his entry price, which is pretty steep?
Aurobindo Pharma is a hold. I mean, it's seen a lot of run up in the last 2-3 months, wherein it's gone up from levels of around 240 to about 400. But the stock remains in long to medium term uptrend. I would even look at some kind of correction or pullback to short term averages to buy into this one. So the buying range would be around 360, 365, and I believe that is where the gentleman has bought the stock. So hold on to the stock, keep the stock below 320, and I think in the next 4 to 5 months the stock should possibly try and get past levels of 500.
Okay, so that's the call coming in on an Aurobindo Pharma. Hope we got your query answered. Let's shift gears then to a sector which has been in focus, and that's Hindalco. We've got a query coming in from Premlal Tandon on this stock.
Hindalco share 100, which I purchased at the rate of 160 about 2 years ago.
Okay, that's the question coming in on a Hindalco. He's bought it at a price of about 160 odd, and off late, the global as well as domestic cues seem to be lining up quite well for metal counters. Avinash, what's your take on the pack as a whole, especially in light of the momentum we've been seeing in the Chinese markets? Metal prices have been moving up, as well as, just focusing on the core business of a Hindalco. What would your advice be?
Mega, actually, I think metal prices have started inching up. There has been some improvement on the aluminum price front also, but the kind of price, the investor has actually purchased the stock seems a little steep. And my sense is that, for the investor to really make money in this stock from the kind of levels he has purchased would be a bit difficult. In this kind of scenario, if he wants to actually, recover his opportunity cost and play on something which can actually give him decent returns over the next 6 to 8 months, I would suggest that, rather than holding on to Hindalco, hoping that the next quarter could be good, because my sense is the coming quarter also could be slightly tight on the margin front. He could buy a stock called TNPL, where I think, earnings are going to grow by almost 30-40%. It's available at a multiple of just 5 times, and it trades at a dividend yield of almost 5%. So clearly, at around 117 odd, I would suggest that if he can exit out of Hindalco and get into TNPL, this is a quality play, and I think there's a lot of institutional as well as HNI interest on the stock. It's a little illiquid, but definitely I think good money can be made here. The target for the next 6 to 12 months is around 150, 154 here.
Okay, so Mr. Tandon, it's advisable that you exit from a Hindalco. Tamil Nadu Newsprint is a better stock and you can look to enter at the current levels of close to 118, 154, that's the upside potential. But Mitesh, let's get in your perspective on the charts. Do you think you'd concur with Avinash with the fact that it is a fairly high entry price and it would be prudent for him to put his money into another stock?
See, Hindalco has been kind of underperforming in the metals segment. What we have seen is that Tata Steel and JSW Steel and the ferrous stocks have done better than the non-ferrous pack. I think, Hindalco, while it remains in a short-term uptrend, I think around 135, 140 would be levels which the stock will find it difficult to get past. I think my advice would be to switch or to use these rallies to exit the stock and switch into something much more better, which is what I would recommend at DV's lab, which has just broken to all-time highs. We have seen that a lot of these pharma stocks which have triggered long-term uptrends have done well. So DV's has just broken into all-time highs. It's given signals similar to Aurobindo Pharma and Biocon. So I would suggest selling Hindalco around 135, 140 and putting the money into DV's.
All right, that's the technical advice coming your way, Mr. Tandon, on a Hindalco, and the fundamental grounds as well. Avinash, of course, was advising you to switch out from this particular counter. Well, let's move on and take on board our next question for the day, and this one's also been sent in from Mr. Tandon, and he's got a query on a Reliance Industries.
I am also holding Reliance share nearly 300, which was allotted to me, which was I purchased at about 775 rupees.
Okay, the heavyweight from the oil and gas space, which, by the way, has been seeing quite a bit of traction building up of late. There has been positive fundamental news with respect to revision in gas prices, and Mr. Tandon is making a tidy sum of 31,000 rupees. Avinash, what is your call on the stock from levels of 878? Because while Reliance Industries has been seeing momentum, it's a very slow mover. Do you think that he should just be happy, perhaps exit at these levels, or wait it out in the stock?
I think, Avan, he should hold on. Clearly, I think he's got a good entry level price, and more importantly, Reliance has got a big booster in the form of getting the regulatory approval, that gas prices can be increased post 2000 April onwards, 14 onwards. So clearly, I think that is a big trigger, and more importantly, on the E&P side and the petchem margin side, I expect that not only the third quarter, but in the next couple of quarters, you could see good improvement. So clearly, Reliance is one stock which would remain in limelight even in 2014. I mean, if he can hold on for a year, my sense is I think he could get a price of 980 or close to 1,000 rupees. So I think holding on would be a better strategy.
Okay, so keep with the Reliance Industries, Mr. Tandon. It has been, of course, a slow mover, but not to worry. 2014 may just bring it closer to the 4-digit mark as well. And would you concur then, Mitesh? Do you think that the entry price that Mr. Tandon's got is a good one at that? He should stay put? And what can he be looking out for?
See, Reliance has kind of done a lot of base building around levels of 700, but in the last few weeks it's gone into this range of 840 to about 915, 920 on the upside. The structure is quite positive, and I'm hopeful that eventually the stock will break on the upside. So I would suggest a hold, and once it starts getting past 920, 925, if the investor can buy more stock, I would recommend that, and then I would look for targets of 1,000, possibly even 1,050 on the upside.
It's our Portfolio Advisor segment, so let's get straight to it. Today we will be discussing Subhash Agarwal's portfolio. Now he's 63 years of age, a retiree, and he's got a long-term horizon on the 12 stocks that he holds. Well, let's start off by telling you what exactly is in Mr. Agarwal's portfolio. He holds about 200 shares of Amtek Auto at 69 rupees, 200 shares of Biocon at 340 rupees apiece. Castrol is what he holds, 309 is his buy price, close to 300 shares is what he's picked up. From the banking arena, there's 200 shares of DCB at 42 rupees. Finolex Cables, 57 is where he's purchased close to 300 shares, making a tidy sum on that as well. JP Infra, that stock is also in his portfolio, in addition to ITC, by the way, at 150. So JP Infra has been picked up at a level of 17 rupees, 500 shares of that counter. KPIT Technology is also 400 shares at 146 rupees. Motherson Sumi from Auto Ancillary, which has been seeing a lot of uptick of late, 300 shares at 182. PSL, he's got that at a level of 21 rupees. Shakti Pumps, there's close to 250 shares at 61 rupees. And from Pharma, there's Spark, which he holds 100 shares at 132 rupees. Well, let's get started then with the first 3 stocks in his portfolio and what exactly the recommendation is. Avinash, a fairly tidy sum being made on all 3 stocks. That's Amtek Auto, Biocon, as well as Castrol. So run us through your recommendations on these 3 names.
In case of Amtech Auto, I would suggest that he should hold on. I think clearly this is a very large player in the auto component space and caters to the four-wheeler as well as the two-wheeler kind of sectors. The kind of price he has entered definitely is a good attractive price from a long-term view. I would suggest that he should hold on for the next 6 to 12 months. One can expect a price of around 96 rupees. As far as Castrol is concerned, I would suggest that, clearly this is one of the MNCs which operates in the lubricant sector and where the balance sheet of Castrol is extremely solid. It's a cash-rich corporate, very healthy dividends. And recently, Castrol has restructured its equity. In fact, this year we could see the equity becoming half. The company is actually repaying 5 rupees back to its shareholders. So I would suggest that he should hold on. I think clearly as the economy improves and the automobile sector actually gains momentum in the second half of 2014, he could see a good upside on the stock. My assessment is that over the next 6 to 12 months, you could get a price of 360.
What's the call coming in on Biocon?
Biocon, Avan, definitely prospects are good, but I think my suggestion would be that, at the current level, he should book out because he's actually entered at a pretty decent level, so he makes a tidy sum of profit. Because from here on, incremental upsides, according to me, would be limited. In place of Biocon, I would suggest that he should enter a stock in the pharmaceutical pack like Lupin, which trades at around 910, and where I expect that not only the next 2 quarters, but next 12 to 15 months, one could see a healthy traction for the company. I would expect a price of around 1050 for Lupin. So he should switch over to Lupin here.
Switch from a Biocon to a large cap pharma name in the form of a Lupin. What about a DCB then, as well as the Finolex cables that he's picked up at levels of 57 and his investment in an ITC where his entry point is about 314 rupees?
Mega, for DCB, I think we have clearly seen the bank performing very well operationally. In fact, we have seen very strong numbers in Q2, and my sense is in the forthcoming Q3 also DCB should do very well. In fact, it's one of those banks which could possibly be classified as a dark horse. So he should hold on here. I would expect a price of roughly about 75 here. So DCB definitely should be a hold. As far as Finolex cable is concerned, the stock has outperformed the markets. It's actually moved from levels around 50 to now 84, 85 odd levels. But still, I would presume that, the kind of order book the company has and the dominant position it has in the electrical and power cable industry, one could expect a price of 102 to 105. So here also, I think he should hold on. Definitely a good entry price which he has entered. And finally, ITC, from the large cap FMCG space, this is one stock which has actually outperformed and done pretty well even when the macro environment has not been all that great. So even in the coming quarter, I would presume that, the profitability record should be maintained. And ITC, definitely the level at which he has entered gives him a kind of a safety margin. So he should expect a price of 360, 370. Here also I suggest a hold.
Okay, so it's a whole recommendation on those 3 stocks given that you are making good money and the upside continues to remain intact. Let's move on to some of the other names. That's JP Infra, 500 shares, KPIT Tech and Motherson Sumi.
Yeah, I think coming to KPIT Technologies, Avan, I think we have seen very good traction from the company. Not only the company's performance in the Q2 has been good, I think the kind of management guidance and the kind of headwinds we are seeing in the US market, especially the automotive sector where KPIT actually operates. I would presume that the coming Q3 as well as the next financial year is going to be very good for KPIT. So probably he should hold on. Again, kind of entry price he has entered gives him a good margin of safety. So I would expect a price of 205, 206 here over the next 6 months. As far as Motherson Sumi is concerned, another quality auto component play. I think clearly if one looks at the next 12 months, the kind of progress the company has made in the European markets and the kind of headwinds we are getting there, clearly I think Motherson Sumi would definitely outperform. He should hold on with a target price of roughly about 220, 230 here.
And the bias in Mr. Agarwal's portfolio is clearly on the mid-cap. So what do you make of his investment in a PSL or Shakti Pumps at 61 and a Sun Pharma Advanced as well?
I think Shakti Pumps is a classic case of where exactly, it's a small cap stock and where actually it has been performing well. In fact, compared to an earnings of around 11-12 rupees last year, the company has shown an EPS of 10 rupees in the first half itself. So I would presume that, although the stock is a bit illiquid, he should hold on. He could get a price of around 90 to 100 here. As far as PSL is concerned, Mega, I think the operational numbers have been pretty weak. In fact, this is one stock where possibly, his choice of investment has not been right. I would suggest that instead of PSL, I think he should exit and buy a mid-cap pharma stock by the name of Dishman Pharma, where I would presume that over the next 6 to 8 months he could get a price of 125, 130, again led by the export story and by the restructuring story. So Dishman would be a better switch as compared to PSL.
And an MT Educare?
Actually for Spark, the holding in Spark also, I would suggest that, I think considering the kind of regulatory headwinds which we have heard recently, has made me feel that probably in the near term, the stock may actually see some resistance. So here I would suggest him to get into an MT Educare, which is a mid-cap, education services company. Clearly, again, the kind of growth potential I see in this business is extremely strong. And he could expect a price of 120 here, I think again from a 6 to 12 month horizon.
Okay, that's the call coming in, Mr. Agarwal, on your entire portfolio and the advice that Avinash has given. So let's start off by running you through recommendations. Hold on to Amtech Auto with a target of 96. Lupin is a preferred option vis-a-vis a Biocon. You can watch out for levels of 1,050. Castrol's a good stock, so stay invested, and the target price is 360 rupees. Moving on then, DCB, the dark horse from the banking space, watch out for levels of 75 rupees. Finolex Cables can also be held on to. It's a 105 rupee target. ITC will continue to outperform, so watch out for levels of 360 and stay invested. JP Infra, you can look to hold on to that one. 10 to 28 is the target that Avinash places. A KPIT Technologies also will continue to see more upside, so watch out for levels of 205. Ditto is the case with the Motherson Sumi. The stock has rallied smartly and expect levels of 230 as a target price. PSL, look to sell out of that counter. Dishman Pharma is a preferred option. 125 is the target level. Shakti Pumps can stay invested in that one. 90 rupees is the level that Avinash suggests you watch out for. And finally, you can look to exit out of a Sun Pharma Advanced Research. MT Educare is the stock that Avinash is recommending with levels of 130 as the target.
Let's get talking with our experts and get you some top trading as well as investing ideas. And Mitesh, we've wrapped up a rather lackluster week at that, but the good thing is that we ended above the 6,300 mark. For the next week, as we begin a brand new year as well, what stock ideas would you be recommending?
Oh yes, we have ended very close to all-time highs, and we still are not sure whether we'll have a breakout or not. I think, the broad idea remains to trade on the long side, but I think I would slightly choose a defensive kind of approach to begin with, unless until we see a breakout happening above 635 or 6400. So the two stocks which I have chosen are Hindustan Lever, which has corrected quite a bit and is now giving a signal of a bounce back. Now can be bought around the 570, 572 mark with a stop below 560. And here I expect the stock eventually in the next few days will bounce back to levels of around 600. The other one is a DV's Lab. It's just broken into all-time highs beyond the levels of 1210, 1215. So now can be bought with a stop at 1180 for targets of around 1300.
Okay, those are two ideas that you can look at from a trading perspective. But let's move on then, Avinash, and get in some fundamental themes that you would advise that would really help our investors.
Avan, I would recommend a company from the mid-cap IT space. The company's name is Hinduja Global Services. The company is a leading BPO player and operates in the US and the Canadian markets. We have seen very strong earnings traction for this company in the first half of 2014, with top line growing by almost 38% and the bottom line growing by 200%. More importantly, from the US and Canadian markets, the company has a very healthy pipeline of almost 200 million US dollars, and the outlook for the second half, according to the management, is very strong. In terms of valuation, the stock trades at roughly about 5 times FY15 and currently trades at a dividend yield of almost 4%. So I would suggest that, this is a smaller IT play, but clearly in terms of the earnings traction and in terms of the valuations, this could provide a good, price reward to investors even at the current levels. And my target for the next 6 to 12 months is 519. The second stock is Divi's Labs, which even Mitesh mentioned. I mean, on a fundamental basis, we like the stock because in the CRAM space, it's a market player and has a very large exposure to both US and Europe. Again, both the rupee depreciation as well as the kind of expansion plans of Divi's, we feel that, both these drivers would actually help the company record very strong earnings traction for FY14 and 15. Clearly, from an earnings point of view, I am expecting an EPS of around 63 to 64 and then thereafter about 75, 78 rupees. Clearly, the Vizag expansion is a very crucial element, and once regulatory approvals do come in, you could see further re-rating on the stock, and my one-year target for Divi's is around 1450.
Okay, so from the small cap space, a Hinduja Global and Divi's is a clear consensus call from both our technical as well as fundamental experts. And with that, gentlemen, we come to an end of BNSN Weekend. Thanks so very much for taking out the time and joining in today.